What's going on, everybody? Today we're going to be talking about some client sentiment trading, what this means, why it matters, and how we could potentially profit from taking a look at the positions being placed currently by FX traders around the world. Stay tuned. Let's get into this one. Hey traders, welcome back to my YouTube channel. If you don't already know me, my name is Nick, and on my channel I share all sorts of trading, kind of my own personal journey as a trader, as well as trades that I take, analysis, tips, tricks, all that sort of stuff. So stick around. If you're new here, subscribe to the channel down below, click that button, help to support what we do here for free for you guys. So what we're gonna be taking a look at here is I've got a site pulled up, and this is dailyfx.com/sentiment. If you type that in, you can get all the information that you see here on the screen. And all it basically is DailyFX is a broker, and they allow, or they share this information publicly. I don't actually use this broker, but I love this tool that they have available. So this tool basically will tell you the positioning of their clients. Now they're a large broker, or large enough that this sample size is probably pretty decently helpful, meaning that they've got enough people and enough client information that this could be a pretty decent representation of the general retail market. So why would it matter to know what retail traders are up to? Well, generally speaking, retail traders, what do we know about them? The sad reality is that most retail traders, are they winning or are they losing? They are definitely losing money. Unfortunately, millions and maybe billions of dollars per year are lost to the Forex market by the retail trader. Now, whether that's because they're greedy, whether it's they're fearful, whether they're trading with no strategy or no system, it doesn't really matter, because the point is, what do most retail traders do? They lose, okay? So if everybody on the retail, it comes down to a pretty simple concept. If everybody on the retail side of things is thinking one way about a market particular direction, it usually actually goes the other way. So for example, if everybody is long on the Euro USD, typically, not always and not immediately, the market will reverse and go the other way just to hurt all of those traders. It's almost kind of a strange game that the markets play in this way. But it makes sense, right? Because the losing traders typically continue to lose and the winning traders typically continue to win. Now, we can use this information to use in our own trading. We can take a look and we can see this information. What are clients up to? Are they long? Are they short? What pairs are they long, and which ones do they think are going down, right? So we can use and see all this information again on this page. A very, very useful and also free information out there. Again, dailyfx.com/sentiment. You can see it up here at the top of the screen. So let's dive into some charts. Let's take a look at just a little bit of a longer term perspective, because one thing about this that I find very, very interesting is that client sentiment usually, in my opinion, is not like it's not like a 1 hour signal. If you're trading the 1 hour chart, I'm not gonna say that this information is very useful to you. My opinion is that the 1 hour chart, maybe not so much. But once you get to the 4 hour, once you start getting to the 1 day and the 1 week chart, this information, in my opinion, becomes a little bit more valuable to you, okay? A lot of heavy, institutional traders, they're not trading on the 15-minute or 30-minute chart. A lot of times they're trading the daily and the weekly because there's more volume and they need to take time to move in and out of positions. So when we're talking about smart money and then we're talking about dumb money, this is really interesting, because now we've got what you would call for lack of a better term, we have the dumb money right in front of our eyes. We can see what they are up to. And generally speaking, a lot of times the smart money is doing the exact opposite. So let's dive into some charts. Let's do some examples, okay? So again, we've got all the major different currency pairs. We've also got gold, we've got silver, we've got the S&P 500, you've got different stock market indices, and you've got cryptocurrencies. So let's take a look at some interesting ones. Now, what you'll see here on this page is that we get a signal, but we also get the net long and net short positioning of these retail traders. Now, again, this is retail traders in the brokerage, right? So we can see whether they are net long or they are net short. Now, what we can do here is that we've got this information where we've got the signal, which is basically what you'll notice is the inverse of what the majority are doing. So for example, let's take a look at, for example, Euro GBP. And when we're looking at Euro GBP, what you will notice here is, if we zoom in just a little bit, this right here says 44% short and 56% long. So what that means is that, well, traders are net long on Euro GBP. Okay, and so then what? What do we do with that information? If the retail trader is net long, the signal provided is going to tell us short or bearish. Okay, so a bearish bias means that we're going to be trading against the crowd here, against the retail crowd, which is, again, they are long. Okay, so if retail traders are long on Euro GBP, then potentially the smart money and maybe ourselves want to think about bearish signals. Now, I cannot stress this enough. This is not a timing indicator. This is not going to tell you, oh, it's time to buy, or oh, it's time to sell. What this is going to tell you is it's going to tell you the positions of retail traders. And I like to be on the other side of the trade if I can be, right? If I find a decent setup, this is something that I'll use. Now, it's not every single time because, again, what you'll notice is that it's not the perfect timing indicator. It's not going to tell you, it's not the secret magical weapon that's going to tell you right when to get in. It's just something to think about. So with that said, when we're looking at a chart like Euro GBP, let's go take a look at it on the actual trading view and see what's going on. So Euro GBP, we're on the daily chart, and let's see what we notice about it. So we'll scroll forward and take a look. What did we notice about the net positions of retail traders? Well, we said that they were net long, not by a tremendous amount, but they were overall net long, according to daily FX, right? So that means that people are buying the dip here. Okay, if that is what everybody is doing, then quite possibly it could be an opportunity to look for shorts. But we don't want to necessarily just jump into and kind of go right to the point of, oh, okay, well, if they're all long, then I'm just going to short right now. Because that kind of throws out the window everything else we've talked about on this channel, which is price action, which is looking for opportunities that give us a better risk to reward, managing our risk. All of that stuff is still very, very important to placing successful trades. So what can we do? Well, if that's what the retail traders are up to, then that's where you could potentially drop it down to something like the 4-hour chart and look for significant opportunities to get short, maybe on a pullback, using those other price action tips. For example, let's just go through a theoretical trade. So again, we know that retail traders are net long on this position. So maybe we look for opportunities where maybe the market starts to rise here, we get a pullback to a significant level, and we actually look to short, knowing that, again, most traders here are long, so they're probably going to be wrong. Right? Now, that doesn't mean every single time that the retail trader is going to be wrong. One thing about markets is that even when the retail traders are all stacked on one side of the trade, sometimes they can actually be right. And, you know, there's debate for the reason behind why that is, but every once in a while, maybe the smart money lets them have a win to keep them in the game. Something to think about. It's a little bit dark, it's a little bit, you know, devious, but it's similar to when you go to a casino, right? And the casino gives you a lot of hype and a lot of glory when you win, and they just shove it to the side when you lose, right? So they want you to keep playing in a casino because they know that eventually you're going to lose all your money. So same thing in the markets. If the retail trader gets a win every once in a while, it keeps them playing, it keeps them coming back. If you feel like, oh, I had a good win now maybe I'm catching on, and you come back and play again, and eventually if you're not doing something with good risk management or with a good proper strategy, eventually you'll lose all your money. So same thing as casinos. That is why there are a lot of comparisons when it comes to trading to gambling. It is to some degree gambling, but I believe that you can build an edge. I believe that unlike casinos, you can actually play the role of the house and have somebody with an edge. So with that said, that is how I would look at this chart. But let's do another example because I don't love the technical side, so it might not be the best example, but let's take a look at something else. So if we jump over to this again, and let's see, we could take a look at let's jump on to GBP USD. I think that might be a good example. So GBP USD, people are net short on this position. Okay, so let's do our analysis really quick one more time. We will take a look at, here is GBP USD. What you'll notice is that 55% of traders are short, net short on the retail side of things. 45% are bullish. Okay, so what that prints is a bullish signal. So if the retail traders are short, then we want to be long, right? Forgive my terrible handwriting. But so if we want to be long, so what can we do with that information? Well, here's an example. And I like the idea of this technical play a little bit better. So if we know that most retail traders are short on this pair, right? Here's the pound dollar. Then what we could do is we could look for technical setups in favor of, if we're using client sentiment as an indicator, we could use this information to try and find long positions. One actually long position that I've looked at, partially based off of this concept, is this pullback level here, right? So what you'll notice is that from a technical perspective, we had price rally to the downside, we had a lot of sell strength, and then we started to see this rise. Consolidation, shoot to the upside, retest, break out, and now we are retesting that zone again. So you might say, well, because retail traders are net short, there might be a better chance that a long position would actually work out, okay? So you use this. This is something to put in your toolbox if you are interested in looking at client sentiment. It's not something that you have to use to trade successfully, but it is something that I like to use and a lot of traders like to use to keep things in mind, right? So if you know that, again, smart money would probably be more interested in long than short based on retail positioning, right? You've got a lot of retail traders who are, they're short, right? They've been shorting on the way up and they're getting hurt. What's most likely to happen? Probably they're gonna get more hurt. Now, we don't know that that's going to be the case. And again, we go back to the casino reference. Every once in a while, they'll get a nice winner just to keep them interested in the game. But the overall idea here is that because client sentiment is generally, retail is short, we could look for long setups that might give us a little bit more of a better chance of success. So for example, now that we know that we should potentially look for longs, now we take that information and we look for things like this, right? Where you've got a broken level being retested, okay? And we use everything that we usually would do, right? In a profitable trading strategy, we set our entry, we look for opportunities to get in and look to get out, right? So it's just kind of something to combine with your overall analysis, right? So if you were to take a trade, maybe you buy at this level, right? You're looking for if price decides to stop, you stop out underneath that previous structure low, just as an example, right? And maybe you go for something like a 2-to-1. Gives you a decent trade, maybe targeting at the previous level of a swing high there, right? So that gives you a decent trade setup, just as a hypothetical example, right? So what can we do with this? At the end of the day, this is just something to add to your toolbox. Again, you can use this information to see what people are doing. Another one that's really interesting is that you see that right now, gold is actually, this is actually interesting because you can see that we're getting a signal for bullish, net long 67%, net short 30%. That's actually weird. Usually you would see the signal be something that's in line with the opposite, but for the most part, that's what we're seeing, right? So for dollar Swiss, you have 60% of traders are long, 40% are short. That would be a signal for a bearish kind of bias. And then when things are really, really imbalanced, right? Then you usually get a mixed signal. But just generally speaking, I'm not exactly sure how this signal generally works, but from my just kind of use of this tool in the past, usually it's bullish when everybody is bearish and bearish when everybody is bullish. But generally speaking, what I really care to look at is this kind of column right here, is what are the retail positions currently set at? Are they net long or are they net short? And usually speaking, I'd like to be on the other side of the trade. One thing that's really interesting, right? I recently put out a video about how I am long on the S&P 500, basically, because I have a bunch of stocks that I bought, right? I bought a bunch of stocks, about $50,000 worth of stocks, and I shared a video on that. You can find it on my channel. Basically saying I'm long and everybody is short. Everywhere I looked, bearish signals, people saying, this market's going down, this market's going down, right? What's interesting is that 79% of retail traders think that the market is going down. They're short on the S&P, okay? So if everyone is short, sometimes the best opportunities are looking for that continuation to the upside. So, again, I've already made some really good money. I'm up, I think 15% on that $50,000 account in just a couple weeks, purely based off of trading against the entire herd when it comes to everybody thinking the market's going down, and now we see the market rising. So this is something that we see again and again in markets, is generally speaking, the sentiment of the masses is a lot of times wrong. And there's some opportunities, if you know how to find them, using something like a sentiment indicator. Guys, Hope you got something out of this video. Do me a big favor. If this was helpful to you, give this video a thumbs up down below. Let me know in the comments what you think about using client sentiment. Is it something you look at? Do you not look at it? Just let me know down below. Thank you very much for watching. We'll see you back next time.